Hey, what's up guys, welcome to another video. So in this video, we're going to be taking a look at the PB ratio, or the price to book ratio. In this beginner series, we've been through other ratios such as the PE ratio, and just like that, the price to book ratio is another ratio in the series of well-known / used ratios. The price to book ratio has been favored by value investors for decades, and has been known to be widely used by market analysts. So, before we get into how to calculate the PB ratio, let's first discuss why. Why would you want to use this ratio when analyzing a particular stock? In a nutshell, it helps you as the investor figure out whether a stock's value in the eyes of the market, or in other words, the share price, is justified or not by the value shown in the company's books / financial statements. Hence, it can help you determine whether a stock is undervalued or overvalued. Of course, there are exceptions and other factors to consider, and in order to determine if a stock is undervalued or overvalued, further analysis is required. However, this ratio helps you understand purely from the perspective of a company's books. It can also help when comparing two stocks with similar growth and profitability. PB can be useful for determining which stock is the best value at that moment in time. So, how do you calculate the PB ratio? Firstly, we have to derive the book value. This is calculated by getting the assets of the company and minusing all the liabilities. These figures can be found in the company's balance sheet. Next, we want to find the book value on a per share basis so we can use it to compare with the current share price. To do this, simply divide the book value by the number of outstanding shares. And the last step is to divide the company's current share price by the book value per share to get the PB ratio. Let's firstly take a look at an easy example to help you understand this. Let's say that company A has a book value of $1 billion on its balance sheet and also has 100 million outstanding shares. Dividing these two numbers gives us a book value of $10 per share. If the current share price is $15, this translates to a price to book multiple of 1.5. Traditionally, any value under 1 was considered to be a good PB value, indicating a potentially undervalued stock. If the PB is greater than 1, the stock costs more than the business it represents. On the flip side, if the ratio is less than 1, then you can buy the stock for less than what it would cost to rebuild the company from the ground up. One of the value criteria by Warren Buffett's teacher, Benjamin Graham, was to find companies with a price to book value ratio less than 1.2. However, times have changed. These days, investors pick the share price based on what they think the company will earn in the future, as opposed to what it's earning now. And many people consider the PB ratio as an outdated way of investing. Another limitation to this ratio is that it's industry specific. Price to book is only effective when evaluating certain types of businesses. Specifically, if much of a business's assets are intangible, as it is in the case with many technology companies, price to book ratio isn't that meaningful, as opposed to, let's say, a property company where the company's assets are all tangible. Let's take a look at a real example in order to explain this. Microsoft currently has a PB ratio of 12.41, which is extremely high. But this is because as a tech company, they do not need as much assets on paper to generate a large profit. They are still growing, which attracts a lot of investors who are willing to pay a premium, which makes the PB ratio very unsuitable for a tech or a growth company. However, the PB ratio can potentially be helpful when comparing between companies in the same sector. For example, you can compare companies like KPG, PCT, and ARG together to see which is potentially more undervalued. However, as with any ratio, it is never enough to simply just rely on the values. If the ratio value is lower, it is critical to do further research to find out the reasons why that might be the case, and whether the reason is permanent or temporary. So, that was the PB ratio. Let us know if you have any questions or any suggestions on a particular topic that you want to see a beginner video on. But for now, make sure to smash that like button and subscribe button if you haven't so already. We'll catch you next time.